Hi, Marianne Croce here from Small Biz Vantage and the creator of 3 Day Weekend System and Coaching. And I'm so glad to be here each and every week. I do these business leadership live in 15 minutes for two reasons. One of them is for you to be able to shift your perspective, the way that you look at your business, really turn that into your competitive edge when you start looking beyond the four walls of your shop. The second reason is for you to be able to really take one action item away each and every week. And that way, you can realize that it takes these small shifts to make impact, not these major, major changes. Small shifts can really have a ripple effect on your business. So, owners have a lot to do, they have a lot of responsibility, they're doing a lot of activities and tasks. And it really, these business leadership in 15 minutes can really help with that. So the question I get commonly asked is, Marianne, who do you work with? Who is Small Biz Vantage for? And I work with single location shop owners, automotive shop owners. These are people who, in most cases, are in some form of owner overload. Again, they're responsible for so much. And this is where I come in and help them gain 10 hours a week. And then it's amazing how freeing that is for them and how they spend their time very, very differently, working more on the business than in the business. It's a great place to be. So let's get started with this week's topic. If you find it valuable, please share it with another business owner. This is a very giving group, shop owners, near and dear to me. So if you find it valuable for another shop owner, share it with them. So today's topic is strategies for profit. And the reason why I chose this is because a lot of times when I'm on a call with a shop owner, or I'm speaking at an industry event and I'm talking to shop owners, there's a common challenge that they have, and it's with the business financials. And one of the questions that I often get asked is, my accountant, Marianne, told me that I made money, but my bank balance doesn't show it. So what's going on here? What am I missing? And there are a few reasons that this could happen. And if I was able to sit down with you one-on-one on a call, we could probably get right down to the cause of it. But I want to give you some basic ideas, areas to look at that I believe would be really valuable for you. And these are profit strategies, right? When you're thinking about strategies, we want to plan for profit because profit is a healthy thing that a business needs to have to be sustainable. Otherwise, your business won't survive without profit. And it's really stressful and really draining and frustrating when a business isn't profitable, because I know the work that goes involved in running a shop and owning a shop. So the first strategy, the first idea here of what could be going on is your accounts receivable. So when you sell a job to someone, you sell the job and then you collect the money when the job is finished. Some people will take a deposit, but basically you get paid when the job is done. So if you're using accounting methods, different accounting methods, there's accrual and there's cash. So if you're using the accrual counting method, what happens is revenue is recorded when the sale is made, not when the money is actually received. So that revenue is recorded when you made the sale, not when you actually got the payment, and it shows up in your bank balance. So if you have a lot of unpaid invoices, your profits will look good on paper, but the cash hasn't hit the bank account yet. Now, there's a way that you can do this when you go into your accounting software. you can actually switch your reports when you're looking at your reports. You can look at them in the accrual method and you could look at them in the cash method. And a lot of times that will clear things up for you and you'll say, okay, I understand why now. So the solution for this is to really implement in your shop a more aggressive policy when it comes to collecting the money to reduce the time it takes to get paid. And what I mean by that is if you are allowing people to have money sit and you haven't, they owe you money and you haven't collected on it yet, you really have to stop doing that. Consider offering accounts that you work for. If you have fleets, consider offering them a slight discount for early payments or letting customers know upfront the payment expectations. Don't surprise them and they weren't aware that they had to pay in full when they came to pick up their vehicle. Also consider offering third-party financing for customers or accounts. And this is really a great thing to do for another option because now it doesn't tie up your cash. So the other thing that could happen is the timing of your expenses. So some expenses might have been paid for after a reporting period. So let's say you closed out a month and then you paid for some of your expenses in the following month. So you paid maybe a large supplier, an invoice, or you made a big purchase at the beginning of the following month. It impacts your cash flow. So you've used your cash, but not necessarily the profits that reported, right, in that prior month. So in other words, you're charging for, you have an account with a vendor or supplier, and you're charging the parts that you're using in June. So your profits are going to look good, but you're not paying June's bill until July. So that's something to consider as well. So the solution may be to monitor your cash flow more closely and realize how much you actually need to have in your account to manage that. Understand that when you're looking at your records, understand your revenue cycle and what do you typically spend in a month and what do you typically take in a month. Very important to do that. And you want to use forecasting and make sure that you have enough of cash available for larger expenses. Maybe you know something's coming up in a few months. There also may be an option if you are going to buy a larger, you have a larger expense, you're going to make payments on it instead of paying it all at once. That'll free up cash flow. The next one is loan payments. Loan payments that you have include both the principal, right? That's the original amount that you borrowed, and interest. The principal repayment will reduce your bank account, but it isn't considered an expense in your profit and loss, your P&L, your income statement, whatever term you use, because it's not an expense, it's an asset. You purchased something, so you traded the cash for that asset. So again, the solution here would be to separate your loan principal and interest payments, right? In your financial tracking, you want to make sure that you have those things separated to ensure that you're aware of the impact that those principal, the repayments are going to make on your cash flow. And you want to plan accordingly. So it's really having a good handle on what's coming in and what's going out of your business on a regular basis. So the last one could be inventory. This is a big one for a lot of people, and it's changed a little bit, but money tied up in inventory can really create a difference when you look at what's in your account. If you purchased stock, you've spent the cash, but it doesn't show up as an expense until you sell it. So it's sitting there on the shelf. You've spent the money, it's gone. But until you attach those parts, that inventory to an RO, to an invoice, until it's sold, it doesn't show up. So there can be a difference as well. So manage your inventory more efficiently by really thinking about what you should keep in inventory and what you should order as you need it. And I know today that certain parts are hard to get or they take a while, very different than years ago. Many parts were readily available. So, what you want to do is not reduce the amount of cash when you stock up on a lot of different things. So, learn what works in your shop. Keep inventory only on the fast moving items. That would be my suggestion. So, with all of these four different things, the idea here is to understand that these factors really help reconcile the difference between your profit and the actual cash that's in the bank, because there's a difference. Regular reviewing of this, your cash flow statement, in addition to your income statement, or sometimes called your P&L, will give you a really clearer picture of where your money is going and what exactly you're spending it on. So the idea here is numbers don't have to be daunting. They could actually be pretty exciting when you understand them. And I just want to share with you the impact of understanding your numbers. Really has a huge, significant impact on a business in many different ways. And I'm going to share some with you. You can make informed decisions. It really helps you identify problem areas of the shop and those that need improvement. And what this does is it leads to optimization and better profitability. Another one is improved cash flow management. And I gave you 4 different ways you can do that. This ensures that the business can meet its financial obligations, avoid going under, basically, and really seize opportunities of growth. Another one is enhanced profitability. So it helps you set realistic financial goals. You can improve your pricing strategies and reduce any unnecessary costs. And this leads to a greater increased net profit. 4 is risk. You're able to have better risk management. So it allowed you to have contingency plans. You're able to maintain financial stability and reduce the likelihood of financial distress. You're not 1 month away from some type of really difficult challenge or some type of hardship. 5 is effective budgeting and planning. So it provides a roadmap for you to achieve those financial goals. You can track performance from month to month and make necessary adjustments and stay on track. You're not finding out that your business is in trouble 3 months, like a quarter, or 6 months later, or you're in it a year and you're like, oh my gosh, I had no idea. So that's really important. The ability to secure financing. When you want a loan for whatever reason, when you have your books in order and you understand what's going on, this really increases the likelihood of securing loans or for investments that are needed or for expansion or, significant purchases. It really helps with that. 7 is compliance and tax efficiency. You want to avoid legal issues, penalties, and you want to optimize your tax liabilities, potentially really saving the business money, a lot of money, because legal issues, legal fees, attorney's fees, and penalties can be very, very expensive. The next one is employee trust. When you're sure of your numbers and you understand, it's amazing how confident you become. Not arrogant in any way, but confident. And this really sets for a positive business environment, a positive culture. It improves relationships and it leads to, better support for your team because they trust you. And lastly, strategic growth. It really helps you identify opportunities. There are opportunities a lot of times right in front of us, but we don't see them because we're stuck in the weeds and we're afraid to look at our numbers. We're not ready to look at our numbers. It also helps you plan for scalable growth and avoiding overextensions. A lot of times people will overextend themselves and they don't realize it until after the fact. So I'd like to leave you with a pro thinking tip. I know I've given you a lot. If you want to listen to the replay and take out a notepad and jot them down, that might be a good idea. Or if you use a tablet, whatever your preferred way of taking notes is fine. But pro thinking tip: understanding business financials really empowers business owners with the knowledge and the tools needed to manage their business effectively, ensure financial health, and achieve long-term success. It's really a good thing. And I find it's a thing that many shop owners aren't 100% comfortable. So that's it for this week's Business Leadership in 15 Minutes. Thanks for being here. If you find it valuable, share it with another business owner and have a great week.